Today was Fed Day. Chairman Powell has come out. He has spoken. He talked about keeping rates where they are, looking at continuing to raise, and staying the course, hawkish. The markets, on the other hand, heard something completely different. Is this a continuation of a bear market bounce? Is it a melt up or something else going on behind the scenes? Lots to talk about today. Let's go. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I am a practicing financial advisor. We are a registered investment advisory firm. So what we talk about here, we do apply to our clients' portfolios, models, etc. Hopefully, you'll like what you hear. If you do, please do consider subscribing. So today was Fed Day. A lot going on. Now, heard some things. Talk about that in the details here in the presentation from Powell. Hawkish, staying the course, no pivot. But again, like I said in the opening, the market completely heard something different. Okay, so we're going to talk about the macro view, what we see, the deterioration of that. Okay, we're going to look at the charts, which obviously look good, and we've had a confirmed breakout. Okay, but as the charts have gone down, bond markets have gone down, yields that is. So who's right here? Lots to talk about, right? So let's head over to the big board. Normally, I would start with our process. Today, going to do something a little bit different, okay? Year to date, market has moved up. But when you look at the underlying fundamentals, the macro view, they do not look good. But the market's gone up. But something has pushed the markets higher. Some market manipulation. So I want to discuss this first, okay? Talked about a little bit in the last video, but being first, hopefully you'll catch this, okay? What's been happening is what's called 0 DTE, 0 days to expiration. These are options, okay? What does that mean? These are daily options. In some cases, they're brought on late in the day with an hour to close, etc. Okay? Unprecedented. It's a way to move the market. So think of it this way. You're putting, in this case, they're buying call options. They want the market to go higher. Well, in every trade, there has to be somebody else on the other side. Okay? So they either have to buy that security. In this case, it has been SPY, the S&P 500 ETF, okay? Or they're going to hedge it. So in either case, whatever they're doing, it's going to push the price higher and then move volatility lower, okay? So this was yesterday. Yesterday, with an hour to go in the market, have a number there, we saw 405,000 contracts on options, okay, at 405. But then you've got them at 404, 403, you name it, okay? So all of a sudden, we saw this surge late in the day. Now, this has been happening for about 12 trading days. It represents 45% of options trading right now. Again, unprecedented. The volatility on this is crazy. I mean, historically, you do options out, whether it's 1 month, 3 months, 6, whatever, okay? Now people are doing weekly, but then daily and hourly. This came on at 3 o'clock yesterday. Now today, okay, hold it, let me finish. But despite that, down the bottom you see very low volume. Volume was actually low a year ago, 20% down, okay? Same thing happened today, all right? As soon as Powell started talking, we had all these buyers. This was the early data, so it was early. Had about 360,000 contracts on call options. In this case, though, 410 on the S&P. Now, we kind of saw that surge. I'll show it in a second. And then we came down. So this has really been a way to manipulate the market. In essence, it could be considered illegal, but it's not. They're getting through with it, all right? But it's changing the way we look at the markets, and has surely made things more difficult especially on my end. So let's get into some of the macro view. Been watching me, you know we're cycle 4. Growth slowing, going to talk about that. Inflation decelerates. I've been using the word disinflation for the longest period of time, okay? That's what's happening to a degree. We're going to talk about that, okay? And then we've got the Fed. So far, this is through yesterday. Now, earnings are about negative 1.39%, okay? But we look at it from a rate of change. But the reason it's only negative 1.39 because you still have oil up 81%, okay? And then you've got consumer communications up as well, okay? Really driving that. But tech down 12%, okay? Financials down 4%. So far the earnings picture has been muddled, and that's 150 out of 500 companies, okay? But here's where earnings are. Look at the earnings misses, the light blue line, versus those who beat, okay? That line has surged worse than even in 2018. Companies that have missed their earnings. Really surprising. And of course, like I've said, the market has gone higher. So last week we got GDP, okay? This is percent change from preceding quarter, right? We hit 3.2% in Q3. We came out with a 2.9%. Now projections are negative 2.4 next quarter, then negative 2.3, coming up still negative. So negative, right? Growth slowing. So growth slowing, earnings recessions, things that I've talked about for quite some time. So this is still the macro backdrop. Nothing has changed. Inflation. This is the Cleveland Fed, okay? They're coming out right now. They usually come before, and they're looking at a 6.44 number. So not much lower than last month, okay? And if you look here on the board, we've got just in the last 30 days, copper up 11%, sugar 8%, iron 11%, lumber 40%, and unleaded gas up 9%. So it's interesting. Yes, we're seeing disinflation, but there's certain pockets here that are really starting to pick up. All right, so last piece, let's talk about the Fed since today was Fed Day, all right? So we've got some comments here from the last meeting. I mean, we will stay the course until the job is done. Hawkish. Okay, we're not going to pivot. Now, they've lost all credibility. The market does not believe the Fed. Okay, pretty clear. But today came out and had a couple interesting statements. So let me read a couple. Likely need restrictive stance for some time. Hawkish, no pivot. Repeats, ongoing rate increases will be appropriate. Again, hawkish. Okay, Fed says inflation has eased somewhat, but remains elevated. Now, I did use a new word today, a word we use all the time, a word I just used, disinflation. It's not surprising, but we're still at a 40-year high. Sufficiently restricted to return inflation to 2%, which we are nowhere near yet, okay? Again, hawkish. Last but not least, understand it's going to affect the American people. So the two things that stood out today, and again, I don't watch CNBC a lot, watch it today so I could see the conference. Holy bullish. Everyone thought it was the greatest thing ever, right? And he was Mr. Calm, and that's why the market reacted. Now, I showed you what happened earlier with the ODTEs, but let's see here, okay? Because the macro backdrop, as I'll show, has not gotten much better. The other thing he talked about is financial conditions. He said they're still restrictive. Now, either he doesn't look at the data, okay, or he just literally is lying, okay? What do I mean by that? Here it is, financial conditions. They're green. They've loosened. That's one of the reasons the market's up. So really surprising. I heard hawkish. A lot of people, the research firm, I've been getting data all throughout the day here, hasn't changed your stance, but very interesting to say the least. So now let's go take a look at those charts. All right, getting into the charts, okay, so we start with the macro backdrop, right, the cycles, that's a big part of our process, and then we look at charts for some confirmation. So a couple things here, right, you see the uptrend, you see the downtrend. Now down here is what's called MACD momentum. There's a negative crossover, so we have not had a positive crossover yet, so I still view that as negative as of today, okay? So let's go to the short-term chart, which is driving the markets right now. Okay, so there's a couple things here that I've talked about for quite some time, and I'll address it. So we've had a couple things. One, right, the blue line is this line, very definitive line, okay, which is what we call trend line. And I said if we broke that, I would start adding some more equities, okay? Now we slightly broke it, but we muddled around there, okay? So you look for confirmation on volume, you're not seeing that, okay, and some other things. Now today, we did, I will say, get a breakout, so we have a confirmation, and tomorrow we'll see what happens, but we have definitely broken above that line. The other thing I'm looking at closely in here, you have an opportunity to do what's called break above, okay, the 50 over 200, which is called a golden cross, okay? So last but not least, down the bottom here, volatility, and again, with these ODTEs, it's suppressing volatility. I mean, unprecedented to be in this much of a downtrend, and today we broke 18 on the VIX. So again, another signal, if it holds tomorrow, will tell us to add more equities as we go forward, okay? Next up is the NASDAQ, okay? So we've seen the NASDAQ right at one point. NASDAQ low was 33%. We've had this surge this year to date, up about 11%. Okay, today up 2%. But again, you saw earnings, minus 12.5% year to date collectively. After market, Meta came out, was positive. Tomorrow, two big ones, Apple, Amazon, by the time this video gets out there. So again, we did break above the 200-day moving average. So it looks bullish. Got that breakout. Let's see if we get a follow through tomorrow to go ahead and start adding. But again, I want to put a little bit of caution here. This is 2000 through 2003. Let me move it up a little bit. Okay, and you can see here what I've done is, this is the total down market, but we have all these pullbacks and then bear market bounces. And you can see all the different numbers, 35, 17% up, 11%, 49%. But of course, at the same time, we go down 28%, 40%. So not uncommon, and that's the thing. Was this a bear market bounce based on macro? Are things going to change? Okay, is it a market melt up where we then roll over? A lot of people are saying that right now, and I think to be determined, but enough for me to look at it and say, okay, it's time to make some changes here. Let's look at it tomorrow hard if we're going to change our stance. In the meantime, let's go to Sector Spotlight. All right, kicking things off, beginning of the year, we talked about our themes, earnings, recessions, and then precious metals, okay, is a big part of that. So what we're showing here is gold, right? You see it. I talked about this last time. I said we've had this surge. I'm waiting for a pullback or a consolidation so I can add. I looked at it today, and it just took off today like everything else. Again, kind of interesting, sort of a hedge, right? Okay, yields go down. Generally, yields go down on 10-year. Gold goes up. So you saw a big surge today. So I did not get a chance to add to that. So gold continues to be one of our top themes, but it's not just gold, okay? Here's silver, okay? Let me see here. Silver had a nice little bounce today as well. Now, silver, I think, here's a little bit more of an opportunity because you've seen we've had this surge, okay, and clearly a consolidation. So it's an opportunity to maybe get yourself in if you're not there yet. I added some more the other day. On gold, I look at as a currency. I'll go as much as 12%. Silver, commodity, 4% max position. And then, of course, you've got some of the miners. So you've got silver miners, gold miners, gold miner juniors, silver miner juniors, all kinds of stuff that you can look at. So here, gold miners, we actually had a little bit of a pullback, gave us an opportunity to add to those yesterday, which was nice because you had some big numbers today. Now, you do see swings like this in miners because they're equities, okay? So when you see a 2.25 surge, yesterday it was down 1.5, so that's, you got to be able to live with that volatility when it comes to the miners, but we are still definitively in a uptrend. So a lot of opportunities here, our biggest holdings as of now. So the next thing we talked about was China. Obviously opening back up. lots of opportunity there. I had just started in my last video, but we continue to add. Okay, this shows FXI, China large cap. Okay, you can see the breakout. You had a consolidation there for a bit. That gave us an opportunity to get in. Actually bought yesterday on a big pullback from a couple days ago. China just came out with their manufacturing numbers, massive, big increases. So China is really a big theme, one of the few countries right now that is in cycle one, which is growth as we go forward here. So a lot of different options here. We've got Hong Kong, China, and then tech only for China itself. So lots of opportunity here as well. So the last thing we talked about at the beginning of the year was bonds. This was our biggest thing last year. What are we doing? Okay, so we've got the confirmation. Okay, so a couple things happened. All right, over here, we've got what's called the MOVE index. That's the volatility index for bonds. I was waiting for it to break. Oh, it broke. Okay, yesterday you're at 99. Okay, but the thing is, and you can see we've been in a big consolidation, and I wanted to wait until today. Okay, Fed Day. Now, here's the thing. The market went up and yields went down. So the bond market's telling you one thing, it's telling you slow growth. Okay? The stock market's doing something else. Who's right? That's like the battle royale right now to see where we go. That being said, same thing. I added some positions about a week or so ago. We've got 2 holdings and looking to really expand into bonds as we go forward, okay? Next up, we're going to talk about what keeps me up at night. There's a couple, added in this one back, and our game plan going forward. Let's go. All right, so bringing back a little what keeps me up at night. You always hear in CNBC, these other places, the consumer is strong. I beg to differ, okay? When you look here, December, percentage of subprime auto borrowers who were at least 60 days late on their bills rose to 5.67% versus 2009 of 5.04%. The consumer represents the largest portion of GDP. And if the consumer's hurting, GDP slows, okay? So what else is going on? Here, consumer credit, we've talked about this, surging, okay? Savings crashing, credit going up, and then, of course, the cost of credit's going up as well, all right? Big time moves here, none of those which bode well for the consumer. This just came out in the Wall Street Journal this weekend. U.S. consumer is starting to freak out, right? So wait a second, the market's going up, I'm showing you all this data, there's a disconnect somewhere, okay? So this article talked about basically the slides I just shown you, right? They're hurting. Inflation's hurting them. They're out of savings. They're struggling big time. We're starting to see it, okay? And then the next thing is, okay, is unemployment. Now, this shows weekly claims. It's actually gone down week after week. Thought Powell was going to talk about that. He actually wants to see more unemployment, believe it or not, but that is part of slowing down growth. This is not good. This is why he's not pivoting, okay? So, private sector job creation originally reported estimated gain of 1.1 million 2022 Q2 was revised to a loss. So last year, okay, we lost 1.3 million jobs. This came out last week, all right? The other thing is this, small business employment, you see it crashing here as well. Here's all the layoffs up through December. A lot of these names were tech, big time tech, okay? Now, that's all changing. What's happened is we're going in different areas. McCormick laying off. Dow, okay, 3M, right? Today, FedEx, Hasbro. It is spreading everywhere we look, okay? So this unemployment, it's a laggard, okay? But it's starting to happen. So these are the macro pieces that are there. Again, reminding us, market's gone up, and this is what's happening, okay? And it's interesting, put this out on our social media platforms. Sellers, right? This is the insiders. People work at all these big companies that own stock, selling like crazy into this rally. Very interesting, okay? So, what's next? What are we going to do? Well, as I said, you got to respect the technical side of things, right? Now, we've been very fortunate with our China plays, with our precious metal plays. We also have a bunch of healthcare names. Added another one this week, okay? But when you look at what's happening in the market, you have to respect this market could go higher. So let's see what happens tomorrow. We had a good meta number today. Now, they lowered their expectations. They beat that, waiting for the earnings call here in a little bit. But if this goes, then we have to go with it, despite me thinking and our macro data telling us we're going lower. We're going lower, but the market wants to go higher. It's also being manipulated like I discussed with those options. So thanks for watching. Michael Loftus, Wealth and Wisdom TV.